Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. This is our weekend show. Thanks for joining. What we're going to do is have a weekend review like we always do. We're going to go over for you our algorithms, what they're telling us about the big picture indexes, and answer that rather cheeky question I ask in the title, which is the stock market about to crash? Everybody loves asking that question. And what we're going to do is boil it down to facts. We're going to look at probabilities and statistics and cut through all of the noise around us. What I promise you I won't do is spend a lot of time talking about sentiment indicators, okay? And how much overbought this is or that kind of stuff, because it means nothing. That stuff is always there. When the market breaks down, everyone points to it. So what we're going to do is look at real algorithms telling us how to manage our assets. Then what we're going to do is dive into the ARMR portfolios. I'm going to share with you how we're positioned, cash that we're holding, positions and groups that we're holding. And of course, the next step will be what stocks are we looking at that we might add to the portfolio next week. We're going to go over chart patterns. I'm going to let you know what they are. Okay. We're going to wrap it all up in a bow with a discussion about precious metals, because as we've been saying since early March, it's time to build an allocation. We've earned the right to take more risk because we're making money in every position. And so let's talk about the steady march towards Basel III rule changes at the end of June and what that's going to do to prices. All right. And of course, then I'll get to your Q&A. If you enjoy this conversation, always you can subscribe right down here, either to the YouTube channel or to the ARMR Report if you wish. Don't forget to hit the like button. That really helps me out on YouTube. So I appreciate that if you guys don't mind banging away. Before I dive in, the usual disclaimer, I'm going to share with you information I use to manage my own personal capital. I've been doing this over 30 years. Okay. I'm going to share my successes, my failures. I'm going to show you portfolios. They're my own. You got to make your own risk tolerance decisions. You got to figure out what your goals are and build a portfolio that works for you. But what I try to do for ARMR Insider subscribers is share my portfolios on a spreadsheet, all the entry points, the dates we add them, the dates we take them off, our stop losses, our targets. This is what I use for my own capital. And then over time, what I hope you all can do as insiders, and those of you considering becoming an insider, is to use the ARMR Report as a guide. It's not an absolute. I don't know you. I couldn't possibly tell you you have to do X, but as a guide to help you understand the waters that we're swimming in and hopefully make you a more successful steward of your own capital. Okay, so let's dive in. This is the ARMR Report. Obviously, you click on ARMR Insiders, get to click on that button. Subscribers, they get these 4 tabs. I update these every day or when necessary. Okay. And so you can see here the ARMR Risk Monitor. If I click on it, and this is going to directly relate to our first discussion today about the indexes. Okay. So you can see right here on the 12th, we changed to risk posture red. Okay. Red light. So let's talk about why we did that. Okay. First things first. We have algorithms written for 7 indexes, kind of 8, because we follow the ARRK Innovator Funds now. And what we look for is confluence across the board. When every index is behaving the same, that's a signal to us that the elephants are starting to stampede. Okay. And it's our job to get out of the way of their feet and to get ahead of them. So we use these algos as a big picture. And we try to put ourselves, they help us put ourselves on the right side of probability over and over again when reward's worth risk. They're not a crystal ball. It's not a neural network. I'm not trying to guess direction. We're simply using a statistical algorithm to say, yep, the conditions are best to put money to work, or the conditions are at their worst to put money to work. And so that's what Risk Monitor Red is. This is not where we put money to work. Doesn't mean we can't put money to work next week. And that's one thing I want to share with you today. So is this the beginning of a bear market? Okay. Let's go take a look at some charts. And we're going to get to that chart later. That's a chart of Sprott physical gold. And we're going to have to dive into that later. But let's start with the S&P here. We have a massive uptrend started by the Fed, controlled by the Fed. It's why I call it the mechanical bull market. It started down here. And we continue to crawl up the bottom line of that Andrews fork. And I want to just do something real quick so we can flip through charts faster. Okay. So what we have here is a market that tested again the 50-day moving average and the uptrend and immediately reversed. So you might ask me, well, how can we go risk monitor red? It only went down 3 days in a row. Okay. It's our strategy when we look at all 7, 8 indexes now, 8. We look for confluence. We look for leadership. When we get 3 down days in a row with other indexes imploding, we go risk monitor red and we raise cash. Okay. So when I say other indexes imploding, you all know what's going on in the innovator funds, down 9% last week, another 4.5% this week, cratering below the 50, the 200, every moving average is headed south. It's an absolute disaster. Let's look at the momentum index. A little bit better, still above the 200, but cratered below the 50. Let's look at the value index. Okay, the value index broke out and reversed and sold off hard on the 3-bar reversal, but stayed above the 50-day. So now let's talk about, is this the start of a stock market crash? Not based on the algorithms. Just because the algos go risk monitor red doesn't mean we're at the start of a market crash. Now, it did last year in February. Risk monitor red, we got out of the market dropped 40%. But normally the market doesn't do that. Most risk monitor reds are early warning signs that end up not resulting in a market crash. It kind of reminds me, I live down here in Florida, and it's like, we constantly get these hurricane warnings, right? But very infrequently do we get a hurricane that actually hits and causes a major problem in South Florida. This is an early warning system. That's what the risk monitor is. And so it forces us to look at our portfolio. It stops us from trying to buy every dip. And it says, wait, we got risk monitor red. It doesn't mean the market's going to crash. It could, we don't know. But it doesn't mean it has to do that. What it means is it's time to stop doing what we're doing and watch to see what happens over the next X amount of days. We may start buying stocks again because this was just a quick tropical storm and it didn't develop into anything else, or it becomes something a lot worse and we've protected capital. ARMR stands for Algorithmic Risk Management Research. So we begin and end by managing the risk, and then we capture upside. Okay. So that's what we had to do last week. We managed the risk by raising cash. So I've got 3 portfolios set up: index only, swing, and my invest strategy. Okay. The index only, when we get risk monitor red, it goes to 100% cash. Now I use these 3 strategies with my personal capital. I divide it into these 3 strategies. So one of my portfolios went to cash. The other 2 portfolios, swing and invest, are carrying 50%, maybe 40 to 50% cash. Okay. We stayed with other positions that allowed us to have a very nice day on Friday. Okay. So it was a question of risk monitor red. I then look at the portfolio, swing and invest, and I say, okay, what positions do I want to book profits on that are up a lot? I'm going to take a gain here on the swing portfolio for sure. What positions are hitting stops? I got to take them out. And which positions can we hold on to? Because we're managing the position. We're not managing our P&L. And if the position's above its stop, we stay with it. But we understand that we're a day or 2 away from a dramatic market decline if it unfolds. And so finger on the trigger to raise more cash if we have to. Okay. Now, typically, what I'll tell you is typically in any risk-off scenario, like we have here in the S&P, 3 down days in a row. You can always have a 2-day rally. All right. So ARMR insiders know that we have set up for you at the ARMR report on the ARMR insiders section of our ARMR report. We have our captain's log. I write this every day, sometimes twice a day, before the market opens and after the market closes, just to kind of consolidate my thoughts on trading and investing. But we have investing rules of the road. Okay, it's something that I like to put together after years of doing this. Things that I've learned that I think really helped me over the years. Okay, and I want to share it with you. And so sometimes what I'll highlight for you one particular issue on that list. And today what I'm going to highlight is the 3-day rule. In any sell-off, you can get 2 up days, and very often they're aggressive up days. Markets up big for a couple days. It's day 3 that matters. So Monday's incredibly important. The close on Monday is incredibly important to me. Market up again, 3 down days in a row, 3 up days in a row. That looks like a shakeout that touched the 50. The whole market's going to go higher. We'll start adding more names to our portfolio again. The market rolls over and breaks down again on Monday. Then all you saw Thursday and Friday was a typical dead cat bounce brought on by options gamma flows. Okay? That's what a dead cat bounce is. People who own a lot of puts sell their puts to book the profit. The dealers, the market makers in options buy the puts and buy the underlying asset, and it just creates a stair step type of rally in the market for a couple of days. When that juice is over, which they call Vanna, if you're following options information, it's called Vanna charm flows. When that juice is over, you get back to what the real direction of the market is. And so what I suggest to you is there can always be 2 days of Vanna flows that rip the market higher. And then we see what the real direction is. So Monday is going to be important, and we'll see what we're doing on Monday. Let's dive into what are the stocks still in the ARMR portfolios. Okay, so taking ourselves out of here, going back into the ARMR Insider list. Whoops. While you're watching me, I'm going to grab a cup of coffee. All right. So over here is our portfolio page, right? ARMR portfolios, model portfolios shows you what we're doing each day, index only, and then our spreadsheet telling you what we own and, kind of highlighted, giving you different information. So let's dive into what exactly did we hold on to last week. Just a couple of ideas. In the midst of the sell-off, there's nothing wrong with it. You could grab a pen and a piece of paper. You might want to jot down these stock symbols and then do your own research to see if it fits your portfolio. Okay. So you can see Coca-Cola, wide pennant breakout. No reason to sell it. Never hit a stop. You can see McDonald's. Huge base breakout McDonald's. These are defensive names, right? Look at that reverse head and shoulders. It's classic. There was no reason to sell it. Came down, touched the 50, looks great. Here's one of my favorite ideas, Teledyne. It came down off of its highs, stayed above its stop, stayed above this massive breakout here. I'd love to add to my position next week. If it looks like the coast is clear, this is the type of stock I will be doubling my position size at the 50-day moving average. Okay? Let's take a quick look at Chevron as an example. We have major breakouts going on across the board in energy stocks. Chevron is in the portfolio. We're collecting a fat yield. It's a clear entry point. The stop obviously is at 100. We're just going to let this thing run and see how much money we can make and collect a dividend while we wait. In the meantime, I'm looking to add this position to the portfolio. Have not added it yet. So this is on the whiteboard, as we call it, the whiteboard. Okay, so there's a whiteboard list. If you were to drill out and then drill down into the whiteboard, you'll see that's another section of the ARMR Insider Report. Okay, and on the whiteboard, what we're going to do is list the names that we think are most important to own. Top of the whiteboard, these are names we're looking at. Okay, and then, of course, top shelf, the greatest names ever, and I'm reworking that right now. And so all of the stocks that we're following fundamentally are on this whiteboard. And what we do is we lift the ones that we think should be bought or near buy points. We lift them up to the top of the whiteboard for insiders to see. So on that whiteboard is going to be the ETF of all of the U.S. exploration and production stocks. Okay. So there's a couple of ideas for you that are still in the portfolio. Oh, and don't forget AT&T. I think this is stupid money. I think this is the kind of money I'm going to collect all year long, the dividend, which is fat. And over time, I would expect the stock to be up 30% from where we bought it with a dividend payout of more than 6%. That is a no-brainer to me. At a time when no one likes it and everyone thinks it's terrible and blah, 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 and all this debt. It's classic. This is a classic entry point down here. And of course, ARMR report, we own it down here. So we're not buying it up here. We own it down here. But anyway, those are the stocks. Those are the kind of stocks that made it through last week. What's similar about those stocks? They're all really defensive stocks. Okay, the amount of destruction going on in the innovator type of stocks, what it's doing is it's driving assets, not just mine. Institutional money managers are hiding out in the safest lower beta names. And until such time as those innovator stocks stop collapsing, those names, those lower beta names are going to turn into wonderful growth stocks. That's what I think is happening this year. In a normal year without the Fed intervention, you would probably have a bear market this year. But instead, what we're getting is a managed bull market. And so money's not leaving the market. It's rotating into these types of names. I'm going to share one sector with you now off the whiteboard. I might add these next week. I want you to see these chart patterns for you to do your own research. All right, so grab that pen again. You're going to want to write these down. Okay, take a look at the chart pattern. And we own this in the portfolio now of AbbVie. Okay, big cap pharma. Big cap pharma. We bought AbbVie right in here, and the stock didn't even act like the market was going. They didn't even know the market was going down. All right, take a look at Gilead's chart pattern and tell me how that's different than AT&T. It's a stock everyone loves to hate. Everyone's sure that the stock's going to go down, and yet all the bad news is in it now, and the stock only goes up. This right here, this selling right here was earnings related, and there was news that came out that remdesivir, they've stopped the trials, it doesn't help people with COVID. All the bad news is out. It pays a great dividend. The stock is going up. This is the type of stocks that go into my ARMR Invest portfolio. I might even put them in the swing portfolios, but without a doubt, they're ARMR Invest names. I try to trade less in the Invest portfolio. I try to have lower beta and stick with names as long as possible. Okay, take a look at Merck. Okay, everyone tells you how terrible Merck is. Really, is it that terrible? It's making this beautiful pennant formation. This is the earnings announcement. So there's all the bad news. Everybody hated the earnings announcement. And by the way, I own the stock here and I got trapped in the sell-off. I sold it because I sell when there's bad news. It hit my stop, I'm out. And then I watched to see how the stock behaves. It made a higher low, stayed within this pennant, and is about to break out above the 200-day moving average. So when all the bad news is out on a stock, when everything you could possibly hear about the stock is terrible, and the stock makes higher lows and starts to break out above key moving averages, that is the very definition of a reward to risk setup that's optimal. Could we lose money in these names? Of course you could lose money in anything. But from a probability standpoint, these setups are perfect and they all pay dividends. Take a look at Bristol Myers. Notice how they're all making pennant formations and they all gapped down with earnings and have immediately recovered and made higher lows. And then I'm just going to throw out there Pfizer, which we know is tied up in the whole COVID situation, but and so I don't usually like to buy stocks like that, but that chart is sick. If that thing can come out of this high tight pennant, it had one bad down day and immediately recovered, this stock looks like it's going a lot higher. And what gives me confidence to say that is that the whole group is moving. This is something you all want to understand as investors. Institutions move in herds. They're moving hundreds of millions, if not billions of dollars. They can't buy one stock. So they find a theme that they like and they buy them all. And so our job is to find confluence. When we see all the names start to perform the same way, we know that's the footprint of institutions, and that's the best reward to risk setup for us. So those are the names we're putting on. Okay. Quick note before I launch into a discussion of precious metals, and then we'll get to your Q&A. Don't forget, by the way, if you want to subscribe, you can right down here, right down in this segment here. You can click on subscribe. You can watch these videos and certainly think of subscribing to the ARMR Report. Also, hit that like button. It's going to help me out. I appreciate it. And what we're going to do right now is talk about MSOS, which I know you all like. So it's not hard to hit the like button. All right. What have I been saying the last couple of weeks? If you guys have been watching this channel, I've been sharing with you that when you have a precipitous decline like this, it takes time to work off that overhead supply. So the first run higher generally runs into overhead and you get sell-offs. All right, so we bought it here. It ran up. It reversed on this day. We exited the position. No harm, no foul. It comes down to $40, which is clearly the line in the sand. It's made a higher low now. This is starting to look interesting to me. If 40 can hold and we can get a higher low, I can start investing in U.S. cannabis again. We all saw GrowGen had a huge earnings announcement. I shouldn't say that. The reaction to the earnings announcement was very positive. It beat expectations. They think, they say things are going to, doing well going forward. I'm looking for an entry point into GrowGen. I hate that pattern. But it's not uncommon for a pennant to break down, reverse, and immediately break out. If that happens, you usually have a screamer on your hands. So we'll watch GrowGen closely, and we're going to watch MSOS closely. Okay? Truth be told, when I look at a bunch of the individual names inside of MSOS, I don't really like it. So I'm going to watch this closely. If it can hold 40 and make a higher low, I get a lot more bullish on these stocks. But the point of today is to talk about precious metals. I've been talking for a couple of weeks. Early March. We started putting money to work in early March in precious metals. It was the very definition of the right reward to risk setup. Put us on the right side of probabilities. And we're making money. Now we've earned the right to take more risk next week if we want to. Let's go look at some charts. Okay, I want to share with you first. I'm not a buyer of GLD, but it just shows you gold, obviously. So I'm just going to show you this chart. Okay, gold all the way back. Let's go all the way back to the original cup and handle breakout in 2019. Okay, so what you have is a rip off of this bottom, pull back. So green entry point here, green entry point here, right? Now, this was the collapse in the market, which immediately reversed. So we actually were buying gold right in here at the ARMR Report, okay, gold stocks. And they screamed higher, okay? Now there was this ending pennant. You can see this ending pennant right here. And we exited our precious metals positions. And we've been waiting ever since to put money to work. So where do you think, when you look at this chart, where do you think we started putting money to work? Right at the bottom of this channel in early March. Now, we didn't buy GLD, but it's such a clear chart pattern. You can see why we're doing it. The reason I'm here today to talk to you about it is that the downtrend hasn't even been broken yet. It's so early in this story if we're right on what we believe. And this is what we believe, and I'll tell it to you in a nutshell. I'm not going to spend all day on it again. There are massive amounts of unallocated gold and silver, okay? You know this. If you don't know this, do your own research. I can't go through it. It would take me hours. And I can digress into that discussion because it's so much fun. But let's put it aside and just say massive amounts of unallocated gold and silver. Basel III rules take effect at the end of June. It makes it uneconomical for banks to be in an unallocated position. So their job between now and then, if they have any sense in their head, is to get out of that unallocated position, which is very hard in a situation where production has declined dramatically. So supply is very limited and demand is starting to come on. And after June, late June, let's call it July, you're going to be in a situation where it benefits. Not only does it make it an unprofitable situation to have unallocated gold, but if you have your gold hoard, if you're a bank or a central bank and you've got your gold hoard, it becomes very attractive to you for the price of gold to go up. Right? We're in a world of ever increasing massive amounts of debt for governments as they try to bail out the world economy from the Wuhan virus. Okay. And the way so they print money and print bonds, right? And so on the one side, the US, for instance, has massive amounts of debt. On the other side, we have assets, right? The United States of America, every country is just like a corporation. We have assets, we have liabilities. If the asset in the balance sheet is gold, and you can revalue that asset 3, 4, 5 times higher, all of a sudden your balance sheet looks a lot better. So all of this has been coming. This has all been coming. This is like a tortoise trying to get across a road. I mean, it goes real slow and you hope it doesn't get run over. Okay. But if it gets to the other side of the road, the pond is all for the tortoise. And so this process has been happening for years. It's not like all of a sudden overnight. And you can see that by looking at the gold chart. This has been coming for a while now. Look at the price of the metal. And hey, guess what? During this period, JP Morgan and Goldman Sachs have gone from short precious metals to long precious metals for their own book. So all of the players that have been manipulating the asset lower are now flipping to the other side. Rules are changing. This is the fundamental reason why we've been trading gold and silver stocks for the last couple of years, why we added to them right in here. So let's go take a look at Newmont Mining. Okay. Right here, those of you who are watching this show in early March, hopefully you did your own research and decided to join us. I know ARMR insiders are long precious metals in a major way, right? Look at what this, we bought it right in here. And this is the example when I say we're looking for a green entry point, which is the ARMR value entry point, where I would say it's a reward to risk optimization. What was the risk? It took out these lows, we'd go to cash. But the reward is what's happening now. We bought it right off the bottom and it's starting to skyrocket. This is our number one position because we believe this is the institutional favorite. All right, I'm going to show you what we own and then what we're thinking of buying. So you guys know we're in Royal Gold, just walking up. Franco Nevada. I mean, we bought them right here and it's just walking up. And this gives me a moment of pause. I just want to share with you, just to remember, the best stocks in your portfolio never hit their stops. They don't even test the stops. They don't even look at the stops. They don't even peek at the stops. They just go up. And so this, when you're thinking of a stop loss, your stop loss should be tight. If you're buying right, if you're buying a value entry point, then your stop loss is obvious. And it should never be attacked. And if it is being attacked, the idea is no good. Move on. Look for the next idea. All right. So anyway, look at these stocks. They're going just straight up, right? Wheat and precious metals right in here. So where are we looking to put capital to work now? Hit that like button. I'll tell you. Just kidding. Just kidding. I really hate videos that do that. So that was just a little bit of a joke. Take out a pen, take out a piece of paper. And what I tweeted out a minute ago was we had a gift last week. Pan American Silver, which is the largest position in GDXJ, SILJ. It's got a big position in GDX. They announced earnings and people didn't like what they said, and the stock imploded. Okay, I'd like for you to note that it's not a stock in ARMR portfolios. We never bought the stock. What we said was, we're going to buy shares of SILJ, which has a large exposure. I don't know what it is, maybe 10% for PAAS. The purpose of using these ETFs is never more clear than this moment. Had we bought Pan American, position would have been down over 10% and blown us out of our stops. But when we buy the ETF, it never goes below the stop. It holds the 50-day moving average, and it was up on Friday. My guess is this is the last shot at $16 a share on SILJ. Okay? That's my guess. We already own it. We already have our full position. I don't know. I might increase my position size. That was such a gift from Pan American. What would be my stop loss? Obviously, if it goes below the low of Thursday. If it takes out that low, the story's over for me, and I'll go back to cash on my silver positions and wait for the next setup. Because the best entry points never challenge the stop. Okay? Couple other metal names that I want to look at. Always at the top of our list is MAG Silver. We think, and this is not in the portfolio right now, but we believe this is a company that could be acquired. So you can write that down and do some of your own homework, MAG. Smaller cap gold stocks are now a consideration at the ARMR report. And Nova Gold is another position that we think eventually will be acquired. And that is a classic. And this is hot off the press, guys. I don't own this in ARMR portfolios yet. But that is an ideal ARMR value entry point. If it takes out the low of this big bar here on the 11th, the low there is $9.15, I'll be out of it. Okay? I'll be out of it. But the reward's enormous from here if this thing takes off. All right? The mid-tier guys that we really like, they're not in the portfolio yet. But let me tell you something. At the ARMR report, I asked all the ARMR insiders, took an impromptu poll, who thinks we need more increased allocation to precious metals? We talked about it this week in our Slack room. If you're an ARMR insider, you're part of the Slack room. And I like to say we're an army of analysts, right? Sharing ideas together in that Slack room all day. And it's backed up by a tank division of algorithms. And that's the ARMR investing way right there. But we all had the feeling maybe we should bump up our allocation. Now, I've got 25 to 30% of my capital in precious metals already. Now that they're up a lot, I've earned the right to take some more risk. I don't know. I might make it 30 to 35%. I don't think I'll ever get to 50% because there's too many other ideas I probably want to own. And I don't want to overweight too much in this year, but I might bump it up again to 30 to 35%. And I might do it by adding some of these names. Nova Gold. I could see adding Kirkland. And another old favorite of mine is AEM, Agnico Eagle. Okay. So these things are just now breaking their downtrends. So we started by buying the big cap and primarily royalty-driven companies because those stocks generally lead. As you can see, they are leading. But in the next leg up, if these things skyrocket, what will happen is these second-tier guys will catch up in a hurry. And so owning some shares of Agnico Eagle might really make sense as this thing breaks out of this pennant, because it could very easily run up, into the 90 area from, where it's trading now, 69, 70. I mean, you could easily get a pop like that. So those are my thoughts for today. I hope it's been helpful. I'm going to get to your Q&A now, so fill up the Q&A section. Bottom line, Our allocation to precious metals and defensive names is allowing us to outperform the market right now. Monday will be a big day for us on the ARMR live trading desk. The close Monday is more important than the open. If gap ups Monday morning begin to fail, you better be sure that I'll be buying puts. You can follow me on Twitter and Stock Twits. And if I have the time, I might shout out and let you know what I'm doing. It'll be a hedge for the rest of my portfolio. I don't have time today to go over the hedging we did last week, but we made money hedging last week. We do that in our day trading portfolio, and that's for another conversation. But for now, let's get to your Q&A. Thanks for joining. Thanks for sharing. What questions you guys have for me? Anything? Tech Monkey, good morning. Totally missed you. I didn't see you last week. Thoughts on DLTR? Let's take a look. Dollar Tree. Not bad. Not bad. And retail looks pretty good. If I had to look at this cup and handle you've got cooking here. If I had to say a sector of the market that looks good to me that I might try to add to the portfolio if this risk monitor red gives us a break and changes back to green, it's probably going to be retail. And so that looks like a really interesting pattern right there. Nice cup and handle, breakout, pullback. If it holds, maybe that's a good idea. Here's a retail name that we like off the desk. SPY. We bought it right in the base here. It blew out and then the market imploded. So we took it out of the portfolio right around break even. And if it holds up, I'll be right back into that stock because I think that looks really good. We also had our eye on Kohl's, KSS. Long-term downtrend breaking, pennant formed. Could be a good idea. All right. So there's your answer there. You have a great weekend as well. Kern is a story in the back of my mind because I love the chart pattern and it's sitting right down on the lows. But there was nothing off that conference call that would get me excited enough to put capital to work right now. And if I'm not comfortable putting money in MSOS, I'm not ready to put money in Kern yet. AFCG. Oh yeah. I still got to work on that. Remind me about it next week. I know you did already, but I just didn't get to it last week. AFCG. All right, Twitter. I got no interest in Twitter right now. Okay, that was a major top. It's an island reversal. It's a gap down. The ARRK Innovator Funds bought a whole bunch more shares, and now she's losing even more money. I don't have any interest in that. These are not the stocks. It's going to take a lot of time for these stocks to form new patterns that'll make me want to buy them. Now, Rio Tinto is different. That looks pretty interesting to me. There's the breakout of the double bottom at the 50, and it's pulled back. That might be an entry point. Here's an idea for you to do some work on. I really like TECK Resources. So let's see if we can get a pullback here. That was a nice pattern right there, and it blew out. I'm hoping to get some weakness. I didn't get it on Friday. B2 Gold Corp. The window's open to put money into precious metal stocks, in my personal opinion. I'm sticking with highest quality names in political jurisdictions where I believe that when the price of gold triples or quadruples, the government won't step in and steal all the gold. That's kind of how I come up with my theories on what stocks I want to own. I know it might sound crazy, but in a world where gold goes to the price that I think it's going, And maybe this is ridiculous because this stock could quadruple before they ever have a problem with a government somewhere. And I don't know where their gold holdings are off the top of my head, but I'm just saying, I'm just thinking long term. I just get more comfortable. And I think that institutions think this way. And so they're going to drive most of their money into Newmont and Royal and these type of Franco-Nevada and these type of things where it's spread out globally. You have most of your focus on the North American continent, Canada, the US. That's where I'm comfortable. That's where I want my gold. I don't want my gold in Turkey, for instance, where, and no offense to anybody Turkish who's watching, but I just can't trust the government not to decide to take over the gold. You know, and not just Turkey, but any country where I feel the rule of law can be a little wishy-washy. I don't know about B2 Gold. I'm just sharing with you the stocks that I'm buying, North American companies, is what I'm most comfortable with. Every now and then I'll dabble in Mexico, but I'm not real comfortable with that, but I'll do it because a lot of the best silver plays are in Mexico. All right. Any thought on SLV for silver? Well, see, this is a problem. I'm glad you brought this up. No interest in SLV. Okay. Talk about unallocated gold and silver. The problem with SLV is that at some point, let's say the price of silver goes to $100 an ounce. At some point, the market's going to discover that the emperor is not wearing clothes. And the emperor in this case is SLV and GLD. Go read the documents. Nowhere in there does it say that you have allocated gold or silver to your holding. It says it's unallocated. It says it might not be there. I mean, there's a whole bunch of disclaimers inside of that prospectus. Just go read it. So I don't have any interest in owning SLV other than for day trading purposes. I like to day trade AGQ, which is twice the performance of SLV. This is a day trading app, but that looks unbelievable, doesn't it? Holy smokes. That could blow out. But for investing purposes, PSLV is the place to go. Sprott Physical Silver. Allocated silver in a vault outside of the banking system, audited 4 times a year. And if you hold the asset more than 12 months, you can demand delivery of silver or gold bars. Silver in this case, and of course, PHYS is gold. You can see Sprott Physical. This was the original entry point, run up, pull back, secondary entry point, run up, pull back, third, run up. Here it is. Now it's come all the way down and tested that support. We were buying the gold stocks here. I don't know. I'm even wondering if I should have an allocation of the physical. Maybe I should have PHYS and PSLV in the portfolio. But I always feel that in a raging bull market in metals, the miners have the leverage, and those stocks usually go up more than the metal. So that's why I'm focused on the stocks. Alexander, it probably is a good time to buy Pan American. I think their problems on the earnings call are probably short-lived, and you can always say that the low of the gap down day is your stop there. That's pretty obvious. So if it goes below the low of that day, you got to stop your loss. But for my purposes, why buy a chart like that when I could buy SILJ? That chart looks so much better, and I'm getting all of the silver names, and I'm getting Pan American. It's something north, I think, of 10% of SILJ is PAAS. So if Pan American recovers, when it recovers, this stock goes up. And meanwhile, all the other names are flying. Here's a name I really like in the silver space I'm trying to get a hold of, and that's Hecla. Because Hecla has lead and zinc at the same time. So you're talking about really 3 industrial metals. That's a much better chart. And a much better earnings announcement. So why would I bother? Hey, thanks for that, man. Sure is, Steven. Sure is. You know, we're trying to find entry points like the metals and then stay with the trades. And I'll tell you right now, honestly, I feel buying shares of Merck and Gilead, and Bristol Myers, that feels like buying gold and silver in March. The reward to risk is right. If Bristol Myers closes below the 200-day moving average, I'm wrong. I'm wrong. But if it stays above here, holds that pennant after what was, quote, a bad earnings announcement, the only direction this thing goes is higher. And I collect the dividend while I'm doing it. So I'm trying to find those names, Stephen. I know you're an ARMR insider. And so we're going to be talking about this a lot, all next week. If the market holds up on Monday and it looks like it's just a shakeout last week, then we're going to be looking for chart patterns that look like this. That look like, it's like we made money in Lockheed Martin. Look where we bought Lockheed Martin, right off of the low. Great run in Lockheed. That's what we're looking for, those chart patterns. Sabre Corp. That's not a pattern that I'm in love with. Let's go to the next one. Yeah, Osisco Gold Corp. Yeah, we've been talking about this on the ARMR trading desk. It's a royalty play, and I love the royalty plays. It's a nice cup and handle, and it's just coming out the top side. So I'd give a thumbs up to OSK. I mean to OR. But I just wanted to see something. You just got to go in there. I don't remember off the top of my head if this is the turkey play. I could be wrong. But you got to go in there and make sure that your wherever they hold their assets is a safe jurisdiction. That's the only key. But that chart looks pretty good. So what was the other name you were asking about? Let's see. Nokia. Oh, yeah. Well, the chart's screwed up because of that huge up day, which is not a real up day there. So this looks pretty good. Nokia looks pretty good. I got to do some work on Nokia. I really do. I'm going to write that down for myself. I think I said that last week and I just didn't get to it. But this is the week to do research, and that chart looks really good. I got to get on the last conference call and find out what was that gap up and how real does it sound? Because if it's real, then probably the stock should be bought Monday if the market holds up. I mean, this is the gap up. This was a tight pennant. It broke out. Then the market imploded for 3 days and it held the 14-day moving average, and you would use the low of Thursday as your stop and you could put a trade on there. That might be a great idea, Raymond. Thanks for that. I'll take a look at it on Monday. Yeah, AG looks good. Definitely a fan of AG. Don't they have some legal woes though? Every time I look at these things, at the end of the day, I just want to own more shares of SILJ. It owns all these names. So I just have a bigger position size on. I get the same upside, and I have no single stock risk. Karen, geez. What would be my suggestion? 300,000 in cash and you're 60. You know what my suggestion is? I'm going to tell you right now my suggestion is. Subscribe to the ARMR report. Become an ARMR insider. And we'll share how we build portfolios. And you can use that as a guide to structure your own. Right? But I can't possibly come on YouTube and tell you this is what you should buy. I don't know you personally. I don't know your risk tolerance. Right? I don't know what your goal is. Okay. But as an ARMR insider, you can use our resources. If you want to manage your own assets, you can use the resources and help structure your own portfolio. So that's my thought. Thanks for asking me that softball question. All right. Next question. Lithium stocks. Let's take a look. This is a shout out to the ARMR insiders. I know you guys are really jonesing to own some uranium plays. They sure look good, right? CCJ held up and really didn't come down. The best names don't come down when the market implodes. And then DNN is a insider favorite, and it's holding the 50-day, making a higher low. So those are interesting looking patterns. Lithium. Oh, what a chart that is. Oh, I got to write that one down. Whew. Well, I'll give you a gold medal for that chart pattern. Look at that. What makes me excited about that chart is simply reward to risk. It's a explosive pattern, right? And the stop is pretty obvious. To me, it would be the low of the 12th, which is 154, let's say. Goes below 154, I have to get out of it, you know? But you could even make the stop tighter. If I was a swing trader, I'd say the low of Friday would be my stop. Honestly. That looks great. ALB, I got to do some research there. Massive up move on the weekly chart. This is the first pull. So really the original pattern is here. Right? This is the original breakout. It ripped higher, and this is the first pull back to the 50. I love those setups. And then LTHM. No, it's the same thing. I really like these patterns. You're coming up with some good patterns. Who is this? Business. I wish you guys would use your real names. Anyway, I'm going to put LTHM. I'm going to do some work on those lithium stocks. They look pretty good, man. Good call. Yeah. I don't know. Thoughts on MJUS versus MSOS? That's a great question. Just off the top of my head, first thought, the more ETFs that are started to help people access the U.S. cannabis market, the better it is for U.S. cannabis stocks. So that's step one. If it broadens the market out and brings more capital into the space, it just makes owning those names even better for us. It makes them more liquid. It makes me want to go buy Trulieve, Green Thumb, Cresco, and Curaleaf, the top four names in these ETFs, because it makes them more and more liquid. One of the reasons why I don't recommend it, and I normally don't do it, is because they trade on the Canadian Stock Exchange and they trade by appointment. When things start going down, the bids disappear. But if you have big ETFs bringing lots of capital in, it's not happening yet. I mean, big ETFs. There's some ETFs bringing capital in. The more capital attracted to the space, what does that new ETF have to do? It has to go buy all the names that are in MSOS. So I don't really think it's one or the other. I happen to like MSOS. I like the people behind it. I think they're smart guys. That's where I'm going to put my money. But the more the merrier is my thought there. And I think big picture, it's great for the U.S. cannabis space. Yeah. LBMA and World Gold Council are protesting Basel III. You know what? And Jesse, that's probably a risk here. Who knows? We get to late June and, Basel III, whoever, controls that decision, delays it. That could happen. That's a risk, actually, to this great story. So we bought it right. We've earned the right to take more risk. We still have to use stops because at any moment, this story can blow up in our face. And I'm glad you just brought that up. But that's just a reality check to make sure that we're aware that the ARMR investing way is a three-stage process. Build the whiteboard. We did it. We had precious metals on it. Use algorithms to find our entry point. We did it. We bought it early March. We're making money across the board. Step 3, stage 3, stop loss discipline. Read and react to price action. Don't force your will on the market. Glad you brought that up. I'm glad I had a chance to say it before we end today. Tesla. Well, as goes Tesla, goes all of the innovator funds. And so there's the problem on Tesla, right? This was the green entry point that failed. We talked about it. I'm going to take this green off the list now because that's a failure. Okay, now we have the big uptrend that's imploding. It's stopping right on the 200-day moving average. You can see the exponential and the arithmetic moving averages are both at the same price. There should be a lot of support here. If Tesla keeps going down, we have a major problem in the market. If Tesla stops here, makes a double bottom, holds above this area, okay, it becomes another big, S&P 500 stock. It doesn't help that Elon Musk is continuing to show his buffoonery. I don't want to get off on a tangent here, but let me just say his comments on Bitcoin or any other cryptocurrency smacks of manipulation to me, just smacks of it. Okay. And this is a guy who didn't mind manipulating Tesla stock, but ran afoul of the SEC. Do you recall that? He came out and put out a tweet, I'm going to take Tesla private. I already have the funding, which was totally illegal. I'm shocked that that guy is still CEO of the company. I don't know who he paid off to get out of that one at the SEC, but he did. Little slap on the wrist. He said, okay, I'm not going to manipulate Tesla anymore, but I can clearly manipulate cryptocurrencies. There's no regulator in there. Nobody knows how much Bitcoin he dumped at 60,000, knowing he was going to make this ridiculous comment about mining and how it affects the environment, as if he just figured that out. I mean, this is the grandfather of saving the environment, created a company who was designed to save the environment. That's why everybody buys a Tesla. And now all of a sudden, the guy just figured out that mining Bitcoin is bad for the environment. It's manipulation of the highest order, with no regulator to go after him for the fact that he probably sold a bunch of Bitcoin in close to 60,000. And no doubt he's looking to buy the Bitcoin back at 46,000 or whatever. We don't know what his manipulation will be. It's disturbing that this is the guy who is the CEO at Tesla. It's disturbing to me. Maybe it doesn't disturb anybody else. It disturbs me. And so I have no interest in investing in a company run by a man like that. That's my thought. Whoops. What do we got here? OR. Biggest in Quebec. Great, man. Great. I like OR. What's NSR? Oh, I like that. Boy, you guys got me off on a rant there. I was trying to avoid that. Hey, and for those of you who are Bitcoin enthusiasts, really interesting. I posted it on Twitter. You can follow me at Brett Rosenthal, B-R-E-T, Rosenthal, R-O-S-E-N-T-H-A-L. And I just tweeted it out. I think it was this morning. A really interesting discussion of the breakdown of how much Bitcoin was put on the network right before Elon made those comments. So you can see this shift of huge amounts of Bitcoin put on the network to be dumped right on the story. I mean, it's crazy. It's crazy. And very often the manipulation could be a long, I'm not saying this means Bitcoin's going to 20,000 either. This is a manipulation. This was a comment about Bitcoin that was totally bogus to wreck it. Probably he sold some into it. Here's what big institutions do. Here's what big manipulators do. They have 100,000 Bitcoin they want to buy. They dump 1,000. They dump 10,000 or whatever the numbers are. They have 10,000 Bitcoin they want to buy. They dump 1,000 on a piece of news and they hit the bids as hard as they can. Panic. Everybody out there doesn't know what's going on. So they start hitting the bid and then they step up and buy 10,000 when they determine that the selling's enough. I mean, this has been going on since the dawn of time. Don't believe me? Just go watch the movie Wall Street. It's true. Just go watch what Gordon Gekko does. It's exactly what just happened in Bitcoin last week. Anyway. All right. Sorry. LIT. We'll take a look at it. I'll put it on the chart. I mean, global lithium battery tech. Great. LIT. Let's do it. That might be a better way to play. Is that an ETF? Might be a better way to play it. Do you know I love ETFs? Yeah, great. That might be the way I want to play lithium. Perfect. Okay. All right, Sean. Let me just tell you one thing about companies going public through a SPAC. Most of those stocks are god-awful when the SPAC is over, right? Just go look at them. I mean, like straight down. The stocks get destroyed. I think SPACs are one of the worst things that ever happened to this market. So I don't have a huge interest in it. Meanwhile, I'm out there buying shares of CERAF, which is the SPAC, right, for Parallel, which is the a major U.S. MSO. So it's not that I won't do it. I'll go take a look at this one, but generally I stay away from SPACs. Good to know. All right. PLG. I do think it's time for, yeah, Platinum looks good. That chart looks okay. No, it looks okay. I mean, look, I think it's time for metals. It's clearly, time for copper is going through the roof, so Southern Peruvian copper, well, it used to be Southern Peruvian. Now it's just Southern copper. Some copper plays, some silver plays. This is why I really like Hecla. I'm really a fan of Hecla, but nothing wrong with that. Karen, we can't wait to see you. And hopefully we'll be able to help you manage your own capital, making your own decisions, but using ARMR report as a guide to direct is what we're trying to do. Net smelter R. What does that mean? Spider, net, I don't know what you're trying to tell me there. Raymond, what was your OR? Oh, okay. I see what you're saying. This is about OR. I like OR. I like it. Good call. Okay, guys, any more questions before I wrap up? Plug Power hydrogen plays. Right now, Stephen, those plays are all caught up in the innovator type of collapse, and there's just a massive amount of overhead. So not really for me right now. Take a look at TAN, which I thought, as you know, we put a position on TAN and we got stopped out of it almost immediately, right? We put it on right here as it went up and then immediately came down. We got out and then the whole thing imploded. So this is a good point. ARMR value entry points are not a guarantee we make money. It's just a great risk reward setup. And we know what the risk is. We got out immediately when it didn't work. The thing imploded. So we're done. But I think it's really interesting that Biden is president and Democrats control everything and solar energy stocks are imploding. And I'm looking at buying shares of the oil and gas exploration sector. Talk about contrarian investing. Why would we be doing that? Don't you want to ask you, well, why is that happening? I don't know. I think everybody got ahead of themselves, assuming that there'd be this green revolution. And now everyone's waking up to the fact that that can't happen for at least 10 years. And in the meantime, all the restrictions on energy makes the energy companies who have energy in the ground more valuable. I mean, so there's going to be one last major hurrah in these U.S. exploration production companies before we ever get to needing to own shares of the solar stocks. I also read a story that, a major amount of components for these solar companies come out of China, and there's some rumblings of trouble getting those components. So, and all that, I mean, all of this leans towards energy prices have bottomed, going higher. We have a commodity super cycle unfolding. We at the ARMR report have, and I'm going to end on this note. Well, okay, I'll take two more questions, but that we at the ARMR report have been, just like gold, we started buying energy a few months ago. But what I decided to do is focus, okay, on the pipelines. We bought the pipelines right back here in early April, okay? And the reason I wanted to do pipelines first is it's just like a no-brainer to me. Fat dividend, more than 5% dividend payout. And yet the stocks, I mean, I've owned these stocks in the before where pipelines can be huge capital gain increases in your portfolio. You can have huge success from a capital gain standpoint in pipelines and collect a dividend. It's like the proverbial cake and eating it. So we started here. We bought that stock. We bought Enbridge. This is right back in here. Excuse me. We recently added shares of Williams. As you can see, it's just now breaking out. These are low risk, high reward setups for me. And we own shares of CVX. So the first thing we did was we bought what I thought were lower beta names paying dividends to see if we earned the right to take more risk. Now it looks like we're earning that right. And so what I probably do is I just go with XOP. There's a lot of my favorite names in here. Okay. I think Apache looks great. CLR looks great. EOG is a screamer. Okay. PXD just did a secondary. The reason the stock is down is because they raised a bunch of capital. So that's like a no-brainer right on the 50-day. You could buy the stock right here, and if it takes out the low of Thursday, you're out. And the only reason the stock is down is that they raise more capital. So anyway, those are some of my other ideas. Those of you who've stuck around for this part of the conversation, those are some more ideas that are the top of my whiteboard. CHPT. Oh yeah, we keep talking about this. Whoops, I don't want to do that. I just want to readjust this down because this is a clear, if you have to stop the position out, there's your stop, But I like to see these patterns, Deb, I like to see them above the 200-day, not below the 200-day. I like to see them when the moving averages are flat to trending higher. And these things are all rolling down. I'm just uncomfortable with this completely. That chart just does not attract me at all. And of course, it doesn't mean it can't go up. I'm just saying. Electric vehicle charging stations. It's just not the right group right now, but if it holds those lows, if you said to me, I love this idea, I've done the fundamental research, don't let me stop you. But I would just say the low of Thursday has got to be the stop loss on this thing. That's in my opinion, You asked me one other thing, Deb. You asked me about like a swing trade or something. Like for me, the best trades are when you don't have overhead. Like there's so much overhead from so many people losing money in this stock since the beginning of the year. They're trapped in the thing. So you get a one-day rally and a bunch of people puke out their shares. Thank God it went up a little bit. And so it caps the upside, and yet your downside is still the same. And so that's not the right reward risk scenario for me. It's not what I look for. Look at that thing. Oil recyclers. I'm going to have to give you a high five on that chart pattern. Problems I've got with it. Do I have any? Well, it doesn't trade a lot of volume, so it's going to be very hard for me or anybody at the ARMR report, to really get involved in the stock. It's not quite $2, and the thing trades on average less than 1 million shares. So it's so easy for one institution to sneeze and the whole thing get blown apart. I mean, of course, the flip side is the whole thing could skyrocket. So not a bad chart pattern. I'm not a guy who chases. I might put this on my list as a day trade idea for our ARMR live trading desk. But I generally stay away from the small names like that. Yeah, I think BJ, I think the retail names look good. BJ looks really good, actually. You're onto something there. I'm going to write that one down, put that right next to So we're putting together a list here, and pen ran out of ink here. All right, so we got BJ. I think Kohl's looks pretty good. I like Best Buy a lot. These charts all look really good. Let's look at Target. That's always my favorite. I think it's gone. I'm not going to pay up for that. And Walmart, I don't know. I had it for a while, and we bought it right in here, and we sold it actually on this day before the Thursday. We sold it Wednesday. Then it collapsed down Thursday, and then it's kind of recovered. That chart is looking less and less appealing to me. So I think I would go with BJ's first. That thing looks really good. Energy transfer partners. Yeah. Now I'm going to wrap up here, guys, because I got to split. I'm sure you do. But let me just say, nothing wrong with the MLPs. It's just from my perspective, I just don't need the hassle at tax time trying to track down K1s. It's just not worth it to me. That the yield difference isn't good enough for me. It's just not enough. I can get yield in the corporate stocks that don't have any K1s. I mean, it's just, so I don't bother with ET. But if you're comfortable with the K1 MLP situation, ET chart looks great, and it can be bought right here. The whole group is going up. When I say it can be bought, you got to do your own research, do your own homework, blah, blah, blah. You know what I'm saying. And I would probably stop it out if it took out the low here. But what I'm saying is look at that chart pattern. It's coming out of the tops right now. You know, ideally, you would have bought it back here when we were buying Kinder Morgan and Enbridge and Williams. But, you know, guys, ladies and gentlemen, I am so appreciative that you would spend some of your Saturday with me. I hope you have a great week next week. Monday's going to be big. ARMR Insiders, I'll see you at 8:30 in the morning to set up our day trading and our investing strategies, okay, for the day. We'll also do a 2:30. No doubt I'll be doing a 2:30 in-game update to get us ready for the close. And if you all, the rest of you who are subscribers, if you're not subscribers, subscribe to this YouTube channel, because what will happen is you'll get emails when we're putting out new videos. And what I'm trying to do for you each day is kind of take some snippets from these insider videos that we do real time and share them with you when the day's over, so you can just get an idea where our head is. And hopefully it'll help you out over time. So anyway, guys, thanks for spending time with me. Don't forget, one more time, bang that like button, and I'll see you all next Saturday at 11:30. All right, take care.